Welcome back to 7 Minute Options on Monday, September 27th, and today's rolling day. So there are 18 days left in the October expiration cycle, and there's a few positions here that I'm going to try to roll today. But yeah, so far it's the week is looking okay. Not a whole lot of market jitters right now, which is pretty good. Looking at Palantir right off the get-go here, working down from the top, we have a covered strangle, 24 put, 28 call. So far, we've made $69 of profit on the 24 put, only $15 of profit on the 28 call, and that's because we're actually quite close to the 28. So if I open up Palantir, let's see where these are. If I look at the, oh wow, there is no November expiration. Oh, there is, yeah, November 19th. Okay, there we go. So the 24 put right now is a 22 delta, and the 28 call is a 50 delta. So because it's a covered strangle, I'm probably going to roll my put up a little bit, up to the 25, which would be a $30 delta. Sorry, 30 delta. And down here, the 31 call is a 31 delta. So that's probably what I'm going to try to go for. So let's do it here. October 15th, if I buy these two back to close them out, and I go to the November expiration, and I sell the 25 put, I sell the 31 call, I pick up $105 of credit. If I pick up the $30 call, I pick up $130 in credit. That's a 37 delta. Yeah, all these positions have a lot of volume, so these are quite liquid. You got penny wide markets, which is fantastic. So this is good, actually. I'm pretty happy. And the question I have now is, should I go for the $30 call and pick up $131 in credit, or should I go for the $31 call and yeah, right now it's at 27.40. Yeah, I feel pretty good. I'm going to go for a $30 call. If it gets challenged, I might have to roll it out and roll it up and out into the December expiration up to 31 or 32 or something. Worst case is something gets called away from me and I lose my 100 shares. But there's no risk to the upside for me because I do own the 100 shares. The really only risk down is to the downside. So whatever, I'm okay with this one. $131 in credit. Let's try to get that one filled. All right. Next on the dock, Pinterest. All right, so we got the 50 put and the 60 call. We're trying to recover from our disastrous earnings call from a few months ago. So we've made $41 on the put, $158 on the call. That's amazing. We sold it for $182. Now it's trading for $24. So that's really good. So I made $200 back this month on this covered strangle. That's amazing. That's good. So we're slowly climbing out of that hole, just the way we expected. So let's see where we are. 53. Let's try to roll these out. Again, going back, if I buy back the 50, I buy back the 60, and I go out to the November expiration cycle, we have another earnings call. Ooh, brutal. Don't want to hold the covered strangle through earnings again. Yeah, I do. I mean, I have 100 shares already, and yeah, let's do it. Actually, let's see. October is, we got a 47 IV in October. Yeah, I mean, it actually kind of picks up here. A lot of IV here in the November expiration, which is the first monthly expiration after earnings. Not terribly excited about holding this through earnings, but why not? Again, I have no risk on the upside because the worst that can happen is my 100 shares get called away. Let's see. If I go to the, yeah, the 50 put is still the 33 delta. And right now we are at 53. And there isn't a whole lot of options here, right? It's either 50 or 45. I got $278 for the 50. Wow. And if I go back to the delta on the upside. I have another 200 bucks here from the 60 call. So I would pick up $405 in credit. Again, that's 32 delta and 33 delta, so that's very rich pricing. And that actually includes the cost of actually closing these out. So that's very rich option pricing in there in Pinterest. Most likely because people know that these earnings moves in Pinterest are quite volatile. So that's fine. I'll pick up the $400 in credit. And again, holding no risk to the upside. So if this thing wants to go blow past 60 because of an amazing earnings call, that's fine. I'm willing to unload the 100 shares at 60, or maybe even just keep it and roll it out if it doesn't get exercised. So that's Pinterest. We'll see if I can get that one filled. FUBO. All right, FUBO. 24 put, 29 call. Same deal. We picked up $151 of profit on the 29 call, $45 of profit on the 24 put. So a lot of these products have been going sideways, which is fantastic for us. So let's see if we can roll that out. Right now it's trading for 25. So looking at October, closing the 24, closing the 29, moving this out to the November expiration cycle. And let's see where the 30 deltas end up. Yeah, I have a choice between 35 delta or 27 delta. Quite a bit of open volume in each. Markets are 3-4 cents wide in each. So right now we're at 25.81. I feel a little bit more comfortable with the 22.5 put, just because 24 seems like it's really close to 25.81. So this actually gives us another $1.50 of stock movement here. So that's fine. I'll pick up this for 154. And if I go down here, the 30 delta is right around the $31 strike. I can pick up $164 of credit, which I'm very happy with. Again, earnings on November 9th, so I will be holding this through earnings. It's at 25.80. That's fine. I'll hit review and send. Again, holding no risk to the upside. All right, positions. That was FUBO. Next one's Clover. This was an easy one. $10 put. We've only made $19 of profit on this one since we rolled it 28 days ago. But let's do it again. If I just take this $10 strike, roll it out to November expiration, I get 49 in credit. Let's see if we can do that. That's an easy one. And what else we have here? EWZ. Okay, so wow, we're only $7 ahead. So this one is the Brazil ETF that I usually have open. I like this one. The 33 put, we're very close to the 33 put. We're still in the money, but not by a whole lot. Actually, our break even, because we collected $100 in credit, our break even would be around 32. So we're still more than $1 in the money. So yeah, let's see if I can just roll this one out. If I pick both of these, actually, my limit is 52. Yeah, so I'm going so I'm going to cancel this order for now. I'm going to see if I can roll these out. I got 94 credit for rolling them out into November. Yeah, I'll do that. I'll take that. And if I look at the November one, I could even realign my deltas, move this back to the 20 delta here for 37, move this back to the 20 delta. Ooh, I don't pick up a whole lot of credit there, do I? This isn't too bad. If I move my put down to the 32 and I roll my call down to the 37, I pick up $78 in credit. That would be the 37 delta on the put side, 20 delta on the call side. Again, this is undefined risk, so I don't want to push it. Yeah, I pick up 78 in credit, and I feel like that's all right. If I look at the chart, yeah, it has been trending a little bit down, so hopefully that's going to bounce back. The RSI is close to the low end of the scale here. Hopefully it'll bounce back. The IV is starting to inflate, which is good. So yeah, let's see if I can roll that. Pick up 78. All right, what else is expiring 18 days from now? Oh my goodness, SLV. The gift that keeps on giving. We gave up $101 on this position over the past month. What is going on with silver? Look at that. It's just continues to melt down. Unbelievable. All right. So if I just take 24 put and I roll it out, I only get 15 bucks. Not terribly exciting. I'd have to roll the put down a little bit. So if it's a losing position right now. If I go down to, say, 22, I have to pay for that one versus a credit. Yeah, it sucks. Okay, I'll pick up $15 of credit there. And just keep holding that position, waiting for a rebound from silver here. And it is kind of overdue for a rebound. I mean, it's just been melting down. At some point, you would think it would start to pick up again. And 24 actually seems quite far away from where it is now. If you look at the scale, I needed to get back to 24. It hasn't been there since August, and even in August, it was only there for one day. The last time it was above that for an extended period of time was back in early July. So this is a bit disappointing here on silver. We also got RMO, Romeo Power. I made up $65 from a horrendous position. I think we started this out as a 15 put, and I had to roll it down to get closer to the at the money strikes to pick up some amount of decent theta. And yeah, that was painful. So this is 65. So let's see if we can keep rolling this out. If I roll this out in November, I can pick up 70 in credit. Fantastic. Let's take that. Again, I think we're climbing out of a hole in this one. All right, that's RMO. Joby. All right, Joby hovering at 1024. All right, what do we got? Oh, yeah, most of these positions here are 480 days away. It's only this one naked $10 put that is expiring in 18 days. We are up $71 on this position. I'm happy to keep rolling this one. I can pick up 53 bucks by rolling it into November. Let's do so. All right, what else we got? Positions. Collapse this here. Joby. Astra. All right, another covered strangle. 100 shares, 7.5 put, 12.5 call. It's been going sideways. We're making $41 on the puts, $48 on the calls. So I'm just going to take these two and just roll them out. I'm happy with where they are. Let's roll them into November, pick up $88 in credit. Fantastic. All right, that's that one. SPY. Yeah, 18 days away. This was one of those insurance calls that it's a 400 put. It's a debit. Sorry, 410 debit put. I'm getting my words confused. Basically, this was a bearish trade. I didn't sell this. I bought this $1,000 wide spread as insurance in case things drop. I'm not so sure it's going to drop that much. I can still sell it for 30 bucks. I might as well, and I just might as well pick up the VIX credit spread that I usually pick up. So I'm going to cancel this order, and I'm just going to sell this at market rate, pick up some money for that one, and then use that to buy the VIX credit spread that I usually like to buy. And then SOFI, all right, 1780. SOFI continues to move up. It's fantastic. All right, these are 480 days away. That's a long bet. We got some 18-day positions here, such as this strangle. 12.5 put, 17.5 put. I think I can roll this out. I can pick up 72 bucks by rolling it into November. Let's do it. And what else do I have here on SOFI? Oh yeah, so this one is, it's expiring in 18 days. It's a $20 naked put and a 22.5 naked call. So this is a very, very bullish position, right? Because I sold the put to finance buying the call. However, you can see I lost more money on the call than I made on the put. So this will most likely cost me money to roll out. Okay, it's telling me it's not going to cost me. Okay, I can pick up 31 credit. All right, let's see if I can do that. If I can pick up credit and continue to hold this position, that would be really good. So if that pricing is to be believed, I am in luck because I can take that extremely bullish position, roll it out, and keep holding it for another month. But yeah, once SOFI gets back above 20, I think this position is going to start making really good money for me. All right, that's it. I just need to basically watch my activity here and start rolling these prices down to get them filled. But you can see it's a lot of activity today. It's my favorite day of the month. This is when I get to roll out my positions. And if I can get these filled today, I think it'll be a good day. All right, thanks very much.